sometime late in the morning, a decision. I think Phelan had made the decision, we're going to stay open, but it was really close. That was, and of course the financial panic. There were, you had 35 million people on September 1st that weren't worried at all about their money market accounts. On September 15th or 16th, they were all panicked.
What year was that?
Well, that was 2008.
2008.
Yeah, so 2008, and you literally had $3.5 trillion in money market accounts, which people regard as the equivalent of cash or bank deposit. That was half the amount of all the insured bank deposits in the country, but these weren't insured. And literally, I remember it because all my friends had money market accounts. I didn't have one, but I was at a party and a birthday party, and that's all they talked about. I suddenly became very popular. I was like a sports hero or something there for a very brief period of time. And of Hank Paulson, they had 175 billion of withdrawals in a few days. That's when I think anybody that knew what was going on panicked, basically. And Hank Paulson did the very gutty thing of using, I think, the exchange stabilization fund that was set up in the 30s because of the revaluation of gold. It had nothing to do with this, but he stepped in and $3.5 billion worth of deposits fell, or trillion, I should say, of deposits felt a whole lot better. If that move hadn't been made, because those funds held all the commercial paper, and you couldn't roll commercial paper, everything had come to a stop. And that was much more scary by far than anything happened yesterday.
So you want to stay with Yahoo Finance. We have much more from Andy Serwer's exclusive interview with Warren Buffett throughout the day right here on yahoofinance.com.
Coming up, the wild week for stocks, or couple of weeks for stocks, is continuing as we see a sharp decline today after yesterday's rally and Monday's rout in stocks. We're going to bring you the latest on the market action right after this.
Lives of millions of gay men in China. Runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要 电击疗法要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blood, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blood in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences' virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿都不靠谱。
Kyle and Klaus, a couple who have come out, live on Blue means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊。我看到这样的留言我是很欣慰。
The government's
world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data.
Guest and ask you about bookings, and I'm just going to throw this at you. We had the CEO from Delta say that net bookings were down 25 to 30% when he addressed a conference here in New York yesterday. So do you expect this to accelerate from the data you're looking at?
Well, we're seeing a clear downward trend. We're monitoring the situation every single day. And when we look at year-on-year variation by week, we see that the situation keeps deteriorating. 3 weeks ago, outbound bookings for the US were about 24% down. 2 weeks ago, they were 50% down. And last week, we've reached that moment when there were actually more cancellations than bookings.
Olivier, Alexis here. I want to talk about full screen that we're showing right now. And we can see there that the period that you previously reported on with your data from January 20 to February 23rd was at 19% year-over-year reduction in bookings. Those are international bookings for flights departing from the U.S. And now with these new numbers that you're just sharing exclusively with us today at 36.5%, when we extend that time period out to March 8th, also starting January 20th. Is this what you expected to see? And what are you seeing as the key moment that really changed the trajectory of this decline?
Well, let's be clear about this. We've never seen anything like this before. This is unprecedented, and it's going extremely, extremely fast. The situation is changing at a very, very fast pace. So did we expect this just a few weeks ago? No, clearly. We did not expect that we would reach that moment when there are more cancellations than bookings. What does this mean for the future? I think that's the key question. At the moment, if people are not booking, that means that they are not going to travel, not next week, not next month, not 2 months, 3 months from now. They're not booking their trips for the summer vacation. So there's a direct impact linked to the current situation, but there is also a delayed impact. We are likely to see the consequences of the current situation even months after the coronavirus outbreak is under control.
Just on an anecdotal basis as well, Olivier, we've all been hearing lots of stories of people who are still traveling, right? One example, one of our producers, Mackenzie, her father is actually traveling right now. He's on a domestic flight here in the U.S. from Sacramento, California to San Diego. And he's the only person on the plane. He sent us a picture. He sent her a picture that she shared with us. So one has to wonder if we're going to continue to see those kinds of dramatic pictures, the kinds of dramatic traffic numbers that you're sharing with us, how much more we are going to see capacity cut as a result of all of this. One imagines that the financials of flying a plane with only one person in it is not fantastic for the airlines.
That's for sure. Of course, one of the consequences of the fact that people are not booking is that planes get emptier and emptier, and there comes a moment when airlines decide to cut on capacity. This is what we're seeing at the moment. It started with connectivity with China. Now we're seeing more and more routes being affected, and we're also starting to see some airlines filing for bankruptcy. We've seen that last week with Flybe. I wouldn't be surprised if you would see more of those bankruptcies happening in the coming weeks.
Olivier, you'd mentioned that this is a situation that we've never actually seen before, but just based on the data that you have, some of the anecdotes you're picking up, the constituents you're speaking with, what does a recovery actually start to look like, and how long does it take to actually get these numbers back to growth?
Well, when I say that we've never seen anything like this before, it's because it really is a worldwide crisis. Usually, when there is a crisis, it's one destination being impacted. Maybe it's because there's been a terror attack, a natural disaster, anything. But the engine of tourism growth and of travel are untouched. So basically, people keep traveling. Chinese people will keep traveling, for example, or American people, and they will what we will just see is displaced tourism. They will choose other destination than the one which is being impacted. What we're seeing at the moment is that there is no engine anymore. The number one outbound market worldwide, China, has disappeared pretty much from one day to the next, and the number two outbound market is also starting to, well, not starting to show signs of slowdown. It's already in a crisis. We've got so few bookings coming from the US that clearly this will impact on the travel sector worldwide. So basically, we end up with a tourism ecosystem which is losing steam because all of the key markets have stopped booking. And we therefore have a problem both on the inbound side and on the outbound side as well.
All right. Forward Keys Vice President for Insights, Olivier Ponty, thank you very much for being here on The Move.
You're welcome. My pleasure.
Well, we just mentioned before some breaking news, the World Health Organization officially declaring the coronavirus, COVID-19, a pandemic. Anjali Kamlani is back with us. And we should mention WHO leaders are speaking right now in Geneva and making these comments. Anjali, what does this mean? What is a pandemic versus an epidemic, and what is the significance of this designation?
So right now we're looking at really the World Health Organization saying that this is a uncontrolled breakout right now. We know that even though we've had some really good news from South Korea and China in the past couple days with reductions, really looking at possibly not, a global, much broader global spread than we once thought. There have been concerns from the beginning about where exactly, the virus has spread to, whether or not it reached countries like Africa, where there is known continents like Africa, where there is a lot of volume of travel back and forth, but they may not have the capabilities for testing. And so that continues to be a concern. Where are these cases existing that are not showing up? Meanwhile, countries like the U.S. are struggling to contain. Italy, we know, is having its own issues as well. So looking at that broader picture, and we just had the Director General saying, we have never before seen a pandemic sparked by a coronavirus, and he's been, put under pressure to call it that. We know that a couple days ago we had other experts already calling it that for days.
So now that it's got that designation, though, does that somehow kick in some kind of financial triggers or some kind of UN response?
From the UN, yeah, from the World Health Organization. So that's the cash pile that they've been trying to really ramp up for help and for aid in dispersing to the countries that will need it the most.
I had the exact same question, so you've answered it. I would just hope that maybe this changes the administration's response to this issue, which has really just been kind of trying to sweep it under the table. Now it's a pandemic, maybe it's a little bit harder to do.
It is, and they had been talking about how, you know, there is still time to change the trend and the outlook for it. So this is possibly the Director General saying we might be past that time.
All right, Anjali, don't forget, Anjali updates this every day, so you can stay on top of
every hour.
Every hour. It's
every minute at this point.
All right, coming up, Harvey Weinstein gets sentenced to 23 years in prison. We've got details for you about that next. Plus, SpaceX is preparing to go where no one has gone before, at least privately. Disgraced Hollywood producer Harvey Weinstein was sentenced to 23 years in prison following his conviction on sexual assault charges. It's a stunning downfall for the mogul, whose abuse of women ignited the Me Too movement. Weinstein's lawyers had previously asked for a 5-year sentence due to his health and age. South by Southwest will honor tickets for the canceled festival at a future date, but will not issue a refund to those who bought them. The annual festival is among several nationwide that have canceled because of the coronavirus. Its policy states South by Southwest does not issue refunds under any circumstances. President Trump endorsed former Auburn football Tuberville, who is running to become a U.S. Senator from Alabama. Trump snubbed his former Attorney General Jeff Sessions, who is challenging Tuberville later this month in a primary runoff. SpaceX President and COO Gwen Shotwell says the company plans to launch astronauts into space this coming May. SpaceX will rely on its reusable Crew Dragon capsule to take astronauts into orbit once it gets final authorization from NASA. The capsule is modeled on SpaceX's Cargo Dragon capsule, which has already delivered supplies to the International Space Station.
Well, consumer prices rose in the month of February, but not by much. The U.S. Bureau of Labor Statistics reported the consumer price index ticked up 0.1% last month, matching its January increase. I want to talk more about what's going on with the consumer right now. Our next guest is joining us from Delray Beach, Florida. Neil Schwartz is Prosper Insights and Analytics Analyst. Neil, thanks for being here. This, even as we see more and more consumer-facing events be canceled, more universities closed. Chicago just canceled its St. Patrick's Day parade. So a lot of big events being called off. Talk to me about what you measure there at Prosper and how you're trying to get a handle on reactions to the COVID-19 outbreak and what might result from it.
Sure. First, thanks for having me on today. Prosper Insight and Analysis does a monthly consumer study of over 7,500 consumers ages 18 years and older. We've been doing this study now for 18 years. And if you look at our data, it really gives a very good reflection of what the United States consumer is saying. And right now, the one thing, on the top level or at the 30,000 foot level is that 82% of U.S. consumers are worried in some form or another about the coronavirus and that it will somehow affect their lives one way or another. So this is, really something that has kind of become very far-reaching in terms of its effect on consumers.
So how do your clients use, I can see how they would use it in the stock market. How else do they use the data that you supply them?
Well, because our data does get very specific in terms of looking at retail habits and specific retailers, we can really identify what consumers will do during this time. As an example, and as you might suspect, we're seeing an uptick in Amazon and people using Amazon not just for some of their consumer discretionary, but their consumer staples. So, we are seeing it manifest itself that way. What's also interesting is that we're seeing certain retailers that maybe have been a little bit vulnerable, especially those brick and mortar retailers that have been vulnerable will now be more vulnerable. Again, what we're also seeing is that our data for the month of March was just released yesterday. And our data was in the field the first week, just released yesterday. For the first time in, I want to look at and say almost 6 months, we're showing a decline in overall consumer confidence among U.S. consumers 18 years and older.
Neil, just hang on one second, because I just wanted to draw people's attention to what they're seeing on their screens, which is that stocks are now at the lows of the session. The Dow off 1,200 points or 4.8%. This appears to be following that announcement we just talked about from the WHO that is now designating the COVID-19 outbreak a pandemic, not just an epidemic, but a pandemic. So just wanted to highlight that as we talk about consumer sentiment. And I know Emily has a question for you as well.
Yeah, sure. Neil, so as you look at your data and seeing that 82% of U.S. consumers are concerned about this outbreak, how is that actually translating into some of their spending? Are there, tangible stores that you're seeing that are benefiting from this? Some things outside of groceries, consumer staples that we have seen as being some of the big beneficiaries of this. Are there any other pockets of strength?
What's interesting is that first, when I took a look at the data, I noticed real quickly that women, as a general rule, were a little bit less concerned in terms of their intensity for the coronavirus. So what I did was I actually backed up and looked at a number of retailers, and one of the retailers that really kind of got my attention was Kohl's. When I looked at the Kohl's shopper, and of course the Kohl's shopper being predominantly women, I did see that the Kohl's shopper looked to be pretty consistent and looked as though, there was not going to be that big of a downturn, even though Kohl's shoppers are, as a general rule, concerned about the coronavirus. But stores that were mall-based, specifically I can talk a little bit about Macy's, JCPenney, that's another story. When we looked at those particular retailers, we did see large groups of consumers, that said that they, were very concerned and that they would be cutting back specifically on their trips, into any place that has, large numbers of people. So, I think, as I said, I think a number of those retailers that have been particularly vulnerable during this, I don't want to use the word retail apocalypse, but has been having a tough time, let's say, transitioning from brick and mortar to online and, and BOPIS, buy online, pick up in store. I think they're still going to be vulnerable.
Right, Neil Schwartz, Prosper Insights and Analytics Analyst, thank you very much for being here.
Thanks for having me.
Well, coming up, as we've been discussing, the World Health Organization has officially declared the coronavirus a pandemic. We have been seeing stocks fall to the lows of the session in reaction to this and really seeing risk off across assets. We will continue to monitor that and talk about potential government action and what will be the continuing market reaction right after this.
Now, there are a lot of fitness gadgets out there. In my quest
U.S. markets are at the lows of the session. If you're looking at stocks here, the Dow now off about 4.6%, the S&P off 4.2%, the Nasdaq off a little under 4%. This after the World Health Organization officially declared the coronavirus a pandemic. Also getting some other headlines from the WHO in their press conference here. They are saying that this is not the time for countries to move to mitigation only. All countries need to review their virus strategy right now. Here with us now to discuss all of this, Chris Campbell, Duff & Phelps chief strategist, as we see this steep sell-off once again in the markets. Chris, what are you hearing from clients right now, and how are they trying to navigate all of this?
Yeah, so clearly no one knows where the bottom is, right? So, and clearly we have not seen the bottom. It's as tests are being now mailed out, and as these, as more people are going to be able to be diagnosed, we're going to see an uptick in people that are affected. And so, as we see those numbers, clearly it's going to be a market. The market's going to respond, and it's going to more horribly affect supply chains, which is going to affect earnings, and so we're going to see this as a lagging and a potential challenge for quite some time. And so it's clients are just genuinely concerned, and there's a lack of clarity.
In a previous life, you had government experience, and where you confronted not this kind of crisis, but crisis. I mean, at the end of the day, a financial crisis is a financial crisis. What do investors look for from Treasury or from the administration at this point?
Yeah, so look, I think looking back on this, I think that when we're post this crisis, I think it'll be, we will see that the Fed made the right move moving early and decisively, and clearly, trying to ease the markets, ease the credit markets, and try to find ways of, suggesting that they're in charge and they're in control of the monetary policy. It's now time for fiscal policy to kick in. So the president, with Secretary Mnuchin and others, went to the Capitol Hill yesterday and laid out a series of ideas for fiscal stimulus. Now Secretary Mnuchin, my last boss, is now talking to Nancy Pelosi to try to find a way to forge a bipartisan path here. What I really genuinely hope doesn't happen is that this gets mired in politics, where the Democrats or Republicans both see some political advantage of seeing the economy stall for some period of time. Now is a time for us to lean in as Americans and try to find a way to provide both assistance to small businesses, and especially those most affected.
Why not just mail a check to everybody and say, stay home for 2 weeks, here's $1,000. You don't have to worry about not getting paid if you're going to stay home. Just do it.
Yeah, so it's interesting you say that. The Congress actually contemplated that and actually tried to do that about 15 years ago. It wasn't very effective. We have seen some mild, some temporary payroll tax holidays be effective because there's so many people employed now, and so many people are.
But not everyone's even subject to payroll tax.
No, I understand that, of course, and so there's that, and coupled with other additional stimulus packages that would help those the lowest earners would be helpful. So paid family leave, perhaps some assistance for child care, other things that would really be really impactful to those at the very end, and those who are self-quarantining or forced to quarantine, that are going to take 14 days off of work that perhaps can't afford that. They need some assistance as well.
Literally 20 seconds. What's the most common question you're getting from your clients at this point?
What the President and Secretary of Mnuchin are going to do next, and what HHS and others are going to be doing to help get our arms wrapped around this, so that we can actually get in a place where this is not going to affect the United States as a country.
All right, Chris Campbell-Duff and Phelps Chief Strategist, thank you for being here.
Thanks.
Thanks, Chris. And we want to thank Emily McCormick and Jared Blickery as well for helping us navigate these past hour and a half of trading as we see stocks once again fall to the lows of the session. Remember, if we were to go into a bear market, the S&P 500 would have to close at 2708, I believe, is the number that Jared shared with us earlier. So we are not there yet, even though Goldman Sachs says we're going to get there. So something to continue to watch here as we try to trade these markets.
And of course, we did break 24,000 on the Dow about an hour and a half ago, and we are now below that. You can see 23,823. Wi-Fi PM has got all of this in its sights, and they're going to help guide you through the next hour of trading here on yahoofinance.com.
Welcome to Wi-Fi PM. I'm Zach Guzman, and we have another volatile session on Wall Street as the World Health Organization declares the coronavirus outbreak a global pandemic, and the losses are putting the major indices even closer to entering bear market territory. You can see the Dow off more than 1,000 points today, just about 400 points away from entering bear market territory. We'll see where we close today. Meanwhile, oil prices are sinking again as the EIA slashes its 2020 forecast for West Texas Intermediate and Brent crude oil prices by roughly 30%. You can see crude trading at $33.80 a barrel. Joining me on today's show is Yahoo Finance's Sabeel Marcellus, along with personal finance expert and the author of Debt Free Degree, Anthony O'Neill, back with us in studio. And guys, the volatility continues today. We'll see where we close, but potentially knocking on the door of bear market territory. And right now, all the focus continues to be on coronavirus cases here at home, now topping 1,000 in the U.S. as Europe also struggles to contain the outbreak. And joining us now to discuss all of this is Market Watch columnist Brett Ahrens. And Brett, thank you for joining us here first. When we look at all this, though, it's another deep down day for the Dow and the overall market, and we've seen these jitters before. But what do you make of the way that this continues to be a yo-yo effect of up and down as we wait and see what kind of stimulus measures could be put in place to restore confidence?
Well, I got to tell you, I don't think I've ever seen markets quite act like this. This is a new one. The down followed by the up. Now, I'm old enough to remember the day-to-day of the 2008 crisis, and that was pretty dramatic. But I think the fact that it's been such a push-pull between the bulls and the bears is quite distinct. Now, you always have big up days during bear markets and crashes and whatever you want to call them.
Sure.
So that doesn't necessarily preclude that this is going to get a lot worse. But it is very interesting that you've got this battle, this one way and the other. I mean, I guess I would say, look, the downs are bigger than the ups. We're getting bigger falls than we are rallies.
Mm-hmm.
So if you were betting on trends, you would probably bet that this is going to go lower.
Yeah, and that's what we've heard from a lot of analysts as well when we think about what could happen if this means we're heading into a bear market right now or if it's just kind of choppy trade. When we talk about those updates, though, most of those have been sparked by updates we've gotten out of the White House or out of other policy advisors. When we look at Vice President Mike Pence, he's scheduled to meet with hospital executives any minute now, and President Trump is planning to meet with Wall Street leaders later this afternoon, potentially to talk about what updates we can get there in terms of trying to battle the coronavirus cases we're seeing grow. Also across the pond, though, the Bank of England announced a surprise half-point interest cut rate earlier, and it comes as German Chancellor Angela Merkel gave a foreboding warning while addressing virus concerns. Very stark difference from what we saw President Trump saying about coronavirus. Just want to play what she said and get your reaction on the other side.
When the virus is out there, the population has no immunity and no therapy exists, then 60 to 70% of the population will be infected, as long as the situation continues to exist.
So there you go. I mean, she said up to 70% of Germans could eventually contract coronavirus. I mean, that's stark contrast to what we saw President Trump talking about yesterday, trying to downplay coronavirus and comparing it to the flu and how, more people get the flu and it's not that big of a worry. Our economy carries on. What do you make of the way that you've kind of got that conflict here in terms of trying to address the public?
Right. Well, the thing is, I'm not a doctor, and I don't know. And the interesting thing is, nobody else seems to know as well. And there seems to be an enormous amount of disagreement. I did say to somebody the other day, I'm not a doctor, but I can diagnose mass hysteria. Mm-hmm. So I'm quite used to sort of panics and hysterias. There's a lot of sort of hysteria going around, particularly on Wall Street and elsewhere. Whether it's justified, we'll have to wait and see. I think there is a large chance that this turns out to be much less dramatic than people are saying.
Well, because everyone compares it back to the SARS crisis, right? And you were around covering that as well.
People are comparing it to the Spanish flu of 1990. I mean, people start coming up with these elaborate, then we have to go next to the bubonic plague of 1348, and sort of people start dragging these things out. We don't know. I mean, you notice, for example, one of the news items is that actually cases have gone, I believe, down in South Korea. And they seem to have flatlined in China. Now, we don't know if the data coming out of China is worth much, but they seem to have flatlined in China.
Yeah, no, I mean, you mentioned the cases in South Korea, and I just want to, touch on that too, because we've seen multiple different countries come at this in a different way, right? China locking down the province first, where we saw these cases begin, and the way that Italy has now kind of instituted that as well. It kind of depends on which country you're dealing with and how much power you have to constrict these things and prevent the flow. But nonetheless, outside of that, consumers themselves not wanting to travel is a trend we've seen from country to country.
Right, and also when it comes, I want to stay away from the hysteria, given that the Dow is down more than 1,000 points right now. We have enough of that going on. But in terms of data, in terms of consumer prices, when people actually go to the store to buy goods, so that unexpectedly went up in February. And now we're seeing the coronavirus like a 1-2 punch. It's both a supply issue and also a demand issue. Do you think consumer prices are going to come down over the next period of weeks and months?
Oh, presumably. I mean, look, there's obviously a run on Purell and toilet paper. But generally speaking, I would assume that prices are going to come down, and of course, fuel prices are going to come down because the oil prices collapsed. I mean, it's worth remembering. Look, it's worth remembering that the way the media operates, and it's not the fault of any individual, but the structural way the media operates as an industry is always going to maximize the sense of alarm. The more you watch the news, the more worried you're going to get about anything, really. And it's, 2 generations ago, you just basically read a newspaper and you watched half an hour of news in the evening. Now we watch it 24 hours a day, and people are basically just panicking themselves. So it is worth remembering that the media we consume is going to sort of inherently push us towards being alarmed.
It's a very good point.
In terms of the markets.
So what's the antidote to that?
I
agree with your analysis. But what are we supposed to do?
Read less news. Read less news.
I was about to say the same thing.
You watch programs like this and highlight
Yahoo Finance.
He's doing Yahoo Finance.
Well, I want to expand on the thing that you said too, though, because you mentioned South Korea. We should highlight that. They have seen their infection rate for 4 consecutive days, despite being one of the worst affected countries outside of China. You can attribute that to a lot of things: increased public communication, maybe addressing that this is actually a problem, as the WHO has now declared this to be a pandemic, giving it the seriousness it deserves, as well as improved testing as well when we look at kind of how the country's been attacking this. But to Sabil's point, when we look at the underlying economy, I mean, we did see the CPI, the CPI measure increase. We're looking at inflation. This was before all of this mass hysteria that we're talking about really hit. But nonetheless, it was the fastest rise in inflation we saw since September 2008. So all the questions around this being, how strong is the underlying economy to deal with A, the short-term jitters that we're seeing, but then also B, if we move past this and everything's not as bad as people expect, what the economy would look like on the other side of this, especially considering the fact that the Fed issued that 50 basis point emergency cut, and could potentially, again, go all the way down to the zero interest rate policy that we saw back in the financial crisis just next week. So how do you put all that together?
Yeah, no, look, I think I was talking to actually a very successful independent money manager just the other day, and he was essentially saying, his argument, he's been buying stocks, is he said, fundamentally, the economy was in a really strong case. There was all sorts of stuff, trade deals and so on, that were still feeding through into the economy. We don't know how bad this is going to be. So of course it could always be, the Walking Dead and the zombie apocalypse. But if it isn't, you basically have an underlying strong economy. One thing that I think gets a little bit missed is people talk about all the things that get cancelled. The conferences that get cancelled, or the rest of it. I live in a neighborhood that gets a lot of tourists, and they go restaurants. But what's going to happen, presumably, is that people will shift their dollars. People who were going to travel aren't just going to sit at home and stare at the wall. They're going to go out locally. They're going to do stuff locally. Even if there is a mass self-quarantine for a few weeks, people are not going to sit at home for the next 6 months doing nothing. So the economy will sort of shift. One thing that's worth remembering about the stock market is that there are hedge funds and speculators who are betting very heavily against the market, who are basically short selling. And one of the things I find very interesting is if you watch on big down days, and I encourage people to watch this evening, watch what happens in the last half an hour. Because when you have a big down day, particularly on a Friday when you're going into the weekend and there's potentially a lot of good news that might come out, you have a rush short positions, and you have a sharp bounce at the end of the day, because these guys have based big bets, basically with borrowed money, that this market's going to keep falling. They're betting on more bad news, and they have to cover their position in case suddenly, good news comes out. People say, actually, we've got a cure, and it turns out, whatever.
Or even like yesterday, where the market rallied.
Basically, any trading day now, the last 30 minutes have been pretty significant when we're thinking about all this positioning. But you talk about some of those sectors that have been hard hit: airlines, cruises, entertainment, all of those. But Sabil, when we talk about people who would not necessarily be made whole by some of those cancellations, or people not going to restaurants in the short term, a lot of question marks about American workers here who might work in the services industry, who might not actually be made whole.
Deutsche Bank did research and they put a number on it. They're saying that 15 million jobs could be threatened by the coronavirus outbreak. And those 15 million workers are those who are temp workers, independent contractors, and on-call workers in a bunch of different industries, from healthcare to law offices. So basically what they're saying is that when the economy slows down, those who are temp workers tend to be the first
to get hit.
Mm-hmm.
You tend to be the
number of
first people that
subscribers, it is
companies
the number of people-
don't rehire or don't renew those contracts or don't call up. So what he was saying is that according to Deutsche Bank's research, we may possibly already be in a recession and it's not being reflected in the data. And when you look at the labor market, those 15 million people, they represent about 10% of the workforce. And when you look at January and February's jobs reports, 273,000 jobs were added during both those months. But since then, we've seen the corona outbreak spread in the United States. And when we're going to look at the jobs report that's going to come out in April for the month of March, they expect that a lot more people showed up to actually claim unemployment. So that's what they expect, and they believe that's going to be reflected in the next jobs report. Now, he was saying that it's never been done before where all of a sudden a jobs report, 15 million jobs were lost.
Yeah.
But he says that it's going to be a gradual erosion.
Yeah, and that's why those jobless claims numbers that we're going to get are going to be so important there, but also the idea that confidence in the short term could take a hit, even if you don't lose your job. Wondering what could happen, especially for those workers who don't have paid sick leave, which is why we're seeing the Democrats want to push so hard for that right now.
Vance, I am more concerned about that than necessarily the 15 million. I think the 15 million is probably a worst case scenario. It's the Department of Spreadsheets and all the rest of it. But people who are in part-time work, people who are particularly sort of economically most marginal, they're likely to be the first hit and to basically get the first layoffs or the cutbacks, or we don't need you this week or whatever.
Well, they were part of that 15 million, right?
Yeah. Well, I know, but it's a question.
Very much so.
It's a question of how much. It's a question. I like you. I doubt we'll see 15 million off the employment figures.
Nobody's hoping for that, but it just gives you a sense of the impact of the coronavirus and how it's impacting all these industries and all these cancellations and all these temp workers. They're just looking for the next opportunity to come work.
Yeah.
And if companies are pulling back, then they're going to be
But here's the thing. We were talking about 0% interest rates. The reality is long-term interest rates now, the Treasury bond rates, are so low that the federal government has enormous leeway to borrow a ton of money and put it in the hands of marginal workers, ordinary people, whatever. There is an enormous amount of fiscal stimulus as well as monetary stimulus that they can do, and people may worry about deficits, but if the bond market isn't worried about deficits, I don't see why the rest of us need to be worrying.
Yeah, and people haven't worried about deficits in a long time.
But we've seen Washington dysfunction. I mean, do you think that they can actually make it work and get us the stimulus we need now?
We're going to be talking about this
It's going to be hard for Nancy Pelosi basically to say, I'm not going to pass a coronavirus rescue package because it might help Donald Trump in November. It's going to be very hard for that argument to
It's an American issue.
And that's why we're seeing. I mean, that's why we're seeing it's kind of stalemate right now. We'll dig into this later on in the show.
They'll get something.
People are hoping so, for sure. But Brett Aarons, thank you so much for joining us.
Great to be here.
Appreciate it. Appreciate all the insight there. Meantime, Warren Buffett, the Oracle of Omaha, is speaking out on the recent stock market volatility in an exclusive interview with Yahoo Finance's Andy Serwer. Here's what he had to say about it.
So it's March 10th, and it's the day after the stock market crashed. The Dow was down over 2,000 points. Oil cratered to $30 a barrel or so. The 10-year bond went to below 0.5%. What the heck is going on, Warren Buffett?
Well, I told you many years ago, if you stick around long enough, you'll see everything in markets. And it may have taken me to 89 years of age to throw this one into the experience. But markets, if you have to be open second by second, they react to news in a big time way. I mean, it's not like the market for real estate or farms or things of that sort. So you have to have a price, assuming, of course, we hit the circuit breaker yesterday, but it still was. It wasn't October 19th, 1987, but it was an imitation anyway. And the combination actually of the coronavirus and what happened with oil over the week. I mean, that's a big 1-2 punch.
All right, there you go. You hear the Oracle of Omaha referencing Black Monday and all the fears from that, Anthony. But when we look at this, I mean, he's famous for basically coming out and saying, don't panic when other people are panicking. And that's really basically what we're dealing with here. A lot of investors very nervous about what could happen here. What are you telling people?
I'm saying the same thing. I mean, I believe a virus is the real deal, but at the same time, I'm prepared. This is not an emergency. It just happens to be an inconvenience. And I believe that I'm just going to sit still. I'm not going to touch my stocks, touch my portfolios. I'm not worried about missing on anything because I just strongly believe that if I'm prepared for anything that comes up, I have money in the reserves and an emergency account. My portfolio is looking good. I'm thinking long term, so I'm not getting scared. I'm not going to pull nothing out. I'm just going to be prepared.
Yeah, and I mean that's basically what we've been hearing from all the other investors out there as well, is making sure that you at least know where your money's at, how you're allocated, what you can do if things get a little bit worse from here, but making sure that you at least are asking yourself these questions should things accelerate as we're seeing them do so today. We're going to talk more about your advice later on in the show, but stay tuned for more coverage of our exclusive interview with Warren Buffett today on Yahoo Finance. It'll be playing throughout the trading day. Coming up, House Democrats calling President Trump's plan to waive payroll taxes to counter the economic drag of coronavirus fears a non-starter. A Georgetown tax professor will join us next to break down the billions it could cause in lost tax revenue. Wi-Fi PM is back in 2.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work when he was in his prime, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. It's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. That was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class
with Biden far removed from virtually anyone else except for his wife, Jill Biden, who stood by his side. Biden's campaign now says he will deliver an address on the coronavirus from Florida tomorrow ahead of the state's primary on March 17th. But guys, of course, it was another one of those nights for Bernie Sanders where it looks less and less likely that he's going to be able to do anything to take this away from Joe Biden the way it stands right now. Of course, he's got the debate coming up on Sunday, but even that debate won't have anyone in the audience. It's just going to be the moderator and them two on stage. So not a lot to work with there.
At this point, it's Biden's race to lose. But it really speaks to the feelings and emotions of Americans right now. There's so much misinformation about the coronavirus outbreak. Many voters want someone who's steady, truthful, and has the experience. Yes. And what we're seeing right now in the Democratic Party, what they're offering up is Joe Biden and Bernie Sanders. The others are no longer in the race. So Biden is the one who actually checks all those boxes. Bernie Sanders, what he's advocating for is a revolution. We're all rattled right now. We don't necessarily want something that's going to disrupt the U.S. economy or disrupt capitalism or bring in democratic socialism. There's a lot going on right now, and what we're seeing the Democratic voters pick is someone steady, someone who has the experience. We know Biden was with President Obama, his VP, for 8 years. We know he knows his way around the White House, and it looks like that's what Democrats want right now.
Yeah, that's kind of the irony of all this too, though, right, Anthony? Because we're talking about family or paid sick leave. That would be a progressive agenda item. We're seeing the Democrats push for it right now. Ironically, coronavirus might be the thing that actually gets what American workers have been asking for, what Bernie Sanders has been pushing for in all this. So despite the fact that you are seeing a lot of voters kind of edge towards Biden, we're seeing that in poll after poll when we think about his handling of the economy. They do favor him on that, especially older voters. But when you look at some of these policies that are coming through, it does sound like it would be Sanders would be proposed.
Man, you know, I really want to say too much about Bernie Sanders.
like that. So with a CEO like McMahon
I mean, especially given what we're seeing today. Yeah. I mean, one of the things, and I don't have the answer to this, and maybe people around the table do. I mean, what was the main thing that changed between yesterday and today?
You know, I don't know if that much has really changed, because don't forget, last week we went through this up, down sequence. So what we're seeing this week, kind of reminiscent of last week, I suppose one thing that you could say it changed is that you had the promise from President Trump that he'd come out with some kind of a fiscal plan to address the coronavirus and the effects on the economy, and we don't have one.
Yeah.
I mean, that's different from where we were yesterday.
That's a really good point.
It does remind me of the financial crisis, when there was talk about doing things, and ultimately, you know, folks needed to see actual plans and what was going to be implemented to kind of help out the situation. And I don't think this is dissimilar, right? That we want to see, okay, so what exactly are you doing? We know global banks have done some things, and there's been some programs, but I think I said to Jason in the newsroom, I'm expecting some kind of coordinated global impact.
And some investors are saying that we had the Fed, for instance, coming out with that emergency cut, so they've sort of taken themselves out of the equation, and
They can't do much
forward.
more.
Right.
They can't do quantitative easing. They could be buying up assets, right? First quarter profit in China by about $500 million, while German rival Puma says it no longer expects any recovery in the short term. The German sportswear maker forecasts first quarter revenue will drop 10%, stripping 400 million to 500 million euros. That's about 450 million, 570 million US from profit. Puma saying today that it cannot quantify the potential impact of the disease outbreak, and so last month's target for a 10% increase in revenue this year no longer applies. I mean, right, we've heard this from a lot of companies, Jason.
Yeah.
I mean, the visibility, it's just not there.
It's not, and you know, we heard early on in this saga from Nike, and so Adi and Puma coming out. No huge shock there. Let's get some world national headlines now, and Bob Moon is here for that. Hey, Bob.
Jason, thank you. Offering few details so far, the Trump administration says it's putting together proposals to deal with the economic effects of the coronavirus crisis. Bloomberg's Irv Chapman reports from Capitol Hill.
Hard-hit taxpayers getting delays in their tax payments could put $200 billion into the economy, Treasury Secretary Steven Mnuchin told the House subcommittee.
The first priority is small and medium-sized businesses that are directly impacted. There are a large number of workers that are going to be required to self-quarantine. For small and medium-sized businesses, we think it's appropriate for the government to pick up those costs.
Mnuchin said a further stimulus proposal might include a payroll tax cut, plus loan guarantees, not bailouts, he stressed, for the travel industry. On Capitol Hill, Irv Chapman, Bloomberg Radio.
After a trouncing in the latest round of primary elections yesterday, Senator Bernie Sanders insists he's looking ahead to the next contests. The Democratic presidential hopeful was still hopeful as he spoke today at his headquarters in Burlington, Vermont.
Donald Trump must be defeated, and I will do everything in my power to make that happen.
Sanders is set to debate Joe Biden on Sunday in Arizona. Before TV cameras, but no audience in the auditorium, the Democratic National Committee made the decision to limit the possibility of crowd exposure to the coronavirus outbreak. 2 subway trains have collided in the Mexico City metro system, killing 1 person and injuring 41. Mexico City Mayor Claudia Sheinbaum says one of the trains apparently reversed into another train by accident, leaving 1 car stacked atop the crumpled ruin of another. Global news 24 hours a day, on air and on Quick Take. By Bloomberg. I'm Bob Moon.
Bob, thank you. You're listening to Bloomberg Business Week. Jason Kelly and Carol Masser here with you on a Wednesday afternoon, trying to make sense of these markets, trying to make sense of where we go next. And in terms of where folks are going here in New York City, they're getting out of Manhattan in many ways, going east, maybe a little earlier than they normally do, going north, maybe a little earlier.
We've heard that from people who walk in and like, I'm taking my wife and my kid, I'm going to send them out of the city.
Totally.
So this story by Amanda Gordon and Katya Kazakina about Steve Schwartzman's grandson. He went on break from boarding school at the end of February. He brought home a classmate from China who understandably couldn't fly back home because of the virus and the lockdown of that country. Well, now he, Owen, and his friend are currently stuck. They're playing video games and other things. But apparently they headed out to the family home on Long Island.
Yep, absolutely. And we are hearing a lot of this, people who have second homes or relatives or whatever it may be, just getting out, because so much of this, we're seeing this happen, whether it's in Washington State, Washington, D.C., I believe, is one of the latest areas, Santa Clara, California, to essentially say, we can't have a lot of people gathered in one place. Right. And I have to say, Manhattan, there are a lot of people gathered in one place. I mean, we were talking just a few minutes ago about the fact that it is a little more sparse. It feels more like summer, like a summer Friday in terms of just fewer people. So I can't imagine that's going to lessen, or the number of people may lessen as time goes on.
It speaks to a column by Justin Fox. It's on the Bloomberg. You can check it out, Bloomberg.com. If you want to figure out a way to simply contain the virus, at least in your world, stay home, work from home. And obviously not everybody can do it. I tweeted out earlier the statistic that it's only about, I think, 27%, according to BLS data, can actually do that. But for those that can, it protects yourself. It also protects others from contamination. So it's something to consider, and certainly a story that we talk about. There'll be more over the weekend in Bloomberg Business Week. All right, you are listening to Bloomberg Business Week on this busy Wednesday, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. U.S. stocks plunging with the virus now a pandemic, and these headlines from the Bloomberg Professional Service. Canada's S&P TSX dropping 20% from the February 20th high, set for a bear market. Brazilian stocks down 10%, triggering a second circuit breaker this week. Here's where U.S. markets stand. S&P 500 index down 141 points, down 4.9%. Dow Industrials down 1,364. That is a drop of 5.4%. And NASDAQ is down 395 points, a decline there of 4.75%. 10-year up 8/32, 0.77%. Gold is down $6 the ounce, down 0.4%, 16.43. And West Texas Intermediate crude oil down 3.5% right now, 33.18 a barrel on WTI. Again, recapping, S&P lower by 140, down 4.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thank you. You're listening to Bloomberg Business Week, live on Bloomberg Radio, streaming live on YouTube. Drew Armstrong is here with us in our New York studio, our Bloomberg Interactive Brokers studio. He leads all of our healthcare coverage here in the U.S., certainly one of the busiest people in the empire. Drew, today feels different.
Yeah, I think that's right. I mean, we've seen a number of announcements over the last 24 hours that I think are coming to fruition, some of the disruptions in daily life that people have been, the government leaders have been warning about that might take place, canceling large mass gatherings, more and more incidences of people being urged to work from home. And I think some very, very stark warnings coming from Capitol Hill saying that, hey, this is a dangerous disease and this needs to be taken seriously, and we need to take steps to protect those who are potentially vulnerable to it.
So get ready for what now?
I mean, I think one of the things that we have seen happen around the world, is that you see a few cases and then you see a significant increase in cases as testing happens. And then you begin to see some of the consequences of that. And in the US, I mean, we've had a huge lag in our ability to do proper surveillance for this disease. And the result is that we've been finding, a small number of patients when they become much more serious. But it also means that you don't have as effective a method to track down patients when they get sick and stop them from potentially giving the disease to others. And that's not a great place to be. And it puts the public health effort, which is incredibly important, on the back foot in doing something like this. So I think next you're probably going to see the rise in cases that everyone has expected. The measures go into place that are more disruptive to try and stop that. Like we were talking about, limits on mass gatherings, working from home, those type of things. And hopefully that's sufficient and you don't see situations like you have seen in Italy, which is a modern Western healthcare system, and places that are perhaps more susceptible to this, like in Iran or in Wuhan.
Right. And so as you talk to executives and investors and those who have a deep familiarity like you and your reporters do with the healthcare system, where are we seeing the stresses and strains? What are they saying to you about how they're dealing with all this?
Well, I think one of the things that you hear consistently with people, and is the reason for a lot of these actions that are being taken, is that people are biasing toward being extremely conservative right now. Because, something that I think we've heard is that you can't undo this decision if you screw it up. If you don't take one of these steps and someone, it appears that someone has gotten sick in your office, there's probably a whole bunch of people that have gotten sick in your office. You can't dial this up once it's already happened, unfortunately. It's unlike a lot of other difficult situations that I think people deal with in a crisis. There is no going back, and so you bias toward being conservative so you don't have to make a decision you regret.
Speaking of, the train has left the station. Well, the Dow has fallen 20% from its February closing high. It is now officially, technically, if you talk to a technician, in bear market territory. So we just did want to point that equities overall, they are near their lows of the session in today's trade.
And keep me honest, we won't officially call it a bear market unless it closes. closes there, right?
Typically, we can call it intraday.
Right.
But yeah, we'll have to see what happens at the close. You know, Drew, I do think, right, so we are where we are. We have to move forward. We talked to a doctor, head of a senior official at the hospital system out there in Seattle, where it's been patient zero has been from this hospital system. So she said early days. So I don't know, can we even start to think in a month or 2 months it starts to get better? Do we even have an indication based on, can't necessarily compare China. I don't know. What do we compare ourselves to at this point?
I don't think we have a lot of great comparisons for this, but I do think that, you know, and again, I'm gonna say huge caveats here, just because there are not a lot of great precedents for something like this. I think this has really been, you know, it is, you know, like the flu, but the flu has not been as disruptive, and we have vaccines and all sorts of other stuff. I think
that the big difference? We had a vaccine.
Yeah, I mean, listen, like the flu is quite deadly, but we have a lot of ways of protecting against it. I mean, we have vaccines that are widely used and that people should get, and that, you know, are very good at not only stopping people from getting the flu, but also reducing mortality from people that do. I mean, you know, some of the bad, scary flu pandemics that have happened in history have been in cases where the vaccine may not have been particularly well matched, or we've been in cases where there are new strains of the flu that people don't have that built-in immunity to. I mean, keep in mind, we have been exposed to flu viruses our whole lives, and so our immune system does have some recognition of them and ability to fight them in some cases. That's not necessarily as much the case it appears, and we're still learning a lot with this. I mean, it is a little more novel situation, but no, I mean, these things take time. I mean, when you're talking about week-long incubation periods, long times that people are sick, it just takes a little while to get through them.
Just quickly, what will make the biggest difference now? Is it more test kits so we can assess the situation? Is it people staying at home? At this point, we can't do containment, so just got about 30 seconds here.
I think the most important thing right now is to know exactly what the size of the problem is. It gives people better information to make better decisions. Mm-hmm. They don't panic when you have things like that. You need more testing. You need to know what the diagnosis and the spread is so you can take the appropriate actions and not have people scared and taking panicked ones.
All right, Drew Armstrong, thank you so much. Really smart analysis of what's going on. Team leader for U.S. Healthcare here at Bloomberg. Just mentioning stocks at their lows of the session. The S&P now down 5%. Much more ahead here on Bloomberg, continuing to help you understand the latest with the virus. We're going to turn to the administration next. This is Bloomberg.
Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, coming up, we're going to take you inside the White House. Justin Sink is going to join us, help us understand the administration's response so far and maybe some of the key moments that changed the tenor.
Yeah. Air Force One and Monday plays into this. It is among our most read stories on the Bloomberg. Let's get back to the markets and the trading day. We are pretty much at our lows here, Charlie.
We certainly are. Fast-moving markets. Keep it locked into Bloomberg Radio. Got to stay with Bloomberg Business Week right through the close, and also check out how Asian markets react tonight. Here's where we stand. First of all, stocks extending losses. S&P 500 index down now by 4.9%. The Dow has fallen 20% from its February closing high into bear market territory. The Dow now down by 1,356. That is a drop, as I speak, of 5.4%. The Dow at the low of the day. NASDAQ lower by 400 points now. It is down by 4.8%. And again, mentioning the S&P down 140 points, down 4.85%. In the year-to-date category, we've got the S&P 500 index down by 15.2%. 10-year up 4/32. Yield right now 0.79%. Gold is down 0.7%, 16.37 the ounce. Crude selling off as well. West Texas Intermediate down 3.4%, 33.18 a barrel. The stocks declined after the World Health Organization called the spreading coronavirus a pandemic. Also, the Trump administration remaining unable to detail any stimulus measures to combat the economic fallout. Nouriel Roubini is chairman and CEO of Roubini Macro Associates, and he says a payroll tax reduction just isn't happening.
The Trump administration wants to have a payroll tax cut. That's not going to fly in Congress. First of all, it costs you $1.2 trillion for a year. And if you're going to wreck that, you're going to wreck Social Security and Medicare, and Democrats are not going to go for it.
PepsiCo has agreed to buy energy drink maker Rockstar Inc. for $3.85 billion as the soft drink and snacks giant seeks to expand its beverage range amid waning appetite for traditional sodas. PepsiCo shares down by 3.1%. Coca-Cola, you recall, announced Coke Energy last year, adding to the stake it owns in Monster Beverage, a top-selling brand. Stifel says Pepsi's deal to buy Monster could increase the likelihood that Pepsi's deal to acquire Rockstar could increase the likelihood that Coca-Cola acquires Monster Beverage. Right now, Monster shares, they are down by 7%. Again, recapping the Dow, the S&P, and NASDAQ all declining, a 139-point drop in the S&P, down now by 4.8%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right. Well, among our most read stories on the Bloomberg today about Monday on Air Force One and the impact that trip had on President Trump. Justin Sink is White House reporter at Bloomberg News. He's on the phone, from the White House. And I know you've got a meeting to go to shortly at the White House. But Monday was pivotal in all of this in terms of President Trump's thinking about the virus?
Yeah, I mean, just talking to White House officials who have been around the president, they sort of noted that there was a real shift between the messaging that we heard before the president left Florida on Monday, where he was kind of got a keep calm and carry on attitude. He was shaking hands. He was attending fundraisers. He was golfing with members of the Washington Nationals. And after this trip back, where not only were televisions on Air Force One turned to cable news, and he was seeing the sort of dramatic fall, the biggest fall in markets since the 2008 crisis, but Congressman Matt Gaetz, a Florida congressman who had been with the president all weekend, received a call that he had been in contact with one of the people who had contracted the virus at a conservative political conference here in Washington, and so had to go self-quarantine. He kind of barricaded himself in one of the cabins on Air Force One and made everybody kind of leave him alone for the rest of the flight. And so by the time that the president got back to Washington, his team had already convened a meeting of his top economic advisors, and there was a real shift in that meeting where the president was, said that he wanted to kind of immediately announce new big sweeping stimulus that could try to shore up markets during this really volatile period.
And Justin, that was Monday. We all went into yesterday, and it felt like investors felt like, okay,
the plan is coming. We're going to hear a plan later this afternoon. And then it didn't really materialize. We did get some reports from Capitol Hill, from some of our colleagues about the discussions back and forth. And you did some great reporting, as always, as well. What happened with all of that?
Yeah, I mean, I think what really happened was the president decided that he was going to announce what he wanted before his team had fleshed it out or gotten sign-off on Capitol Hill. And so, big initiatives, especially the payroll tax cut, was something that just didn't have support, not only among Democrats, but even some Republicans who saw it as not carefully targeted enough. And so investors had a reason to think that we were going to get more details yesterday. The president himself had promised to come out and sort of detail the policies, but instead what we got was Larry Kudlow late in the day sort of admitting to reporters, hey, we still have to figure out the nuts and bolts of this before I can explain to you how we're going to pay for it, why it would be good, what the exact impact of these measures would be. And I think we're seeing the White House try to work through that now. We know Treasury Secretary Mnuchin and House Speaker Pelosi have been trading proposals back and forth.
Right.
But it's obviously not what markets were hoping to see.
Justin, we know you've got to run. Just got about 40 seconds left here before you have to do that. You're heading to the White House for a meeting, I believe, with bank executives. What are you hearing in terms of a timeline of something coming out to help the markets, to help industries that are hurting, to help citizens that are hurting?
Yeah, so obviously I think the White House is feeling pressure to announce new steps to help shore up the economy. Part of the conversation with bank CEOs is going to be them encouraging banks to have leniency with people with student loans, people with mortgages that they have to pay, but who could be missing paychecks or seeing far lower salaries because of the coronavirus situation. Hopefully that will help, but obviously the eyes are still tuned to what this big stimulus package might be.
All right, Justin Singh, go cover that meeting. We'll be on the lookout for your great reporting. Thank you so much. White House reporter for Bloomberg joining us on the phone from the White House. And again, you've got a lot of meetings going on. The metabolism has quickened, certainly, at the
Great
administration over the past couple days, and that is for certain.
Hilton to draw down part of a $1.75 billion credit line as the virus spreads. We're going to talk about Boeing, which is going to be drawing or expected to draw down a much bigger part of a credit line that they have. But this speaks to, and there's a story in the magazine that takes a look at specifically the virus impact on the corporate credit markets, and specifically those companies that have a lot of debt on their balance sheet. Some in particular, whether it's travel and leisure, the hospitality industry, obviously the energy industry. But this is a point where some of those companies that are in tough situations, this could potentially be a do or die time for some of them. So we're going to watch them very closely.
And I think the tourism and travel element is really important. We were seeing some tweets and headlines that came across around Amtrak, canceling a bunch of trains. I mean, that is a very familiar route for a lot of our listeners between New York and Washington, New York and Boston, everywhere in between. And they're cutting capacity because the ridership just isn't there. Those people aren't staying in hotels. They're not eating meals on the road, and that does have a pretty broad economic effect.
The Fed boosting the size of the overnight repo operations, biggest term operations. The limit is $50 billion. We've been tweeting about this, and also, so it's kind of all hands on deck at this point. Let's get back to World and National News headlines and Bob Moon.
So to recap, the NBA Golden State Warriors have announced Thursday's game in San Francisco against the Brooklyn Nets will be played without fans. In Arizona, the Democratic National Committee is planning the next presidential debate on Sunday in essentially an empty auditorium to avoid spreading the coronavirus before TV cameras but with no audience. In the state of Washington, one of the hardest hit, Governor Jay Inslee is banning events with more than 250 people in and around the Seattle area.
These events that are prohibited are gatherings for social, recreational, spiritual, and other matters, including but not limited to community, civic, public, leisure, faith-based, or sporting events.
Kansas City, Missouri says its St. Patrick's Day Parade and the Big 12 basketball tournament are still scheduled to happen, but the director of the city's health department, Dr. Rex Archer, is urging anyone with compromised immune systems, those who are pregnant, have pre-existing conditions, or are elderly to consider staying home.
As you get up towards 70...